So you've got a market that, if you wait and you buy in at 1,050 or 1,000 or 950, you could have a pretty good probability that you could see a 20 or 30% increase in the value of that investment within a couple years on this kind of spike that we just saw in June and July. That's a pretty good return in a hostile economic environment for financial assets.
Silver lining in radical times with Monex and CPM Group.
I want to talk about, one of the precious metals that doesn't really get much airtime, palladium. And there's been a couple articles recently out there, one from Sibanye Stillwater, I believe out of Johannesburg, talking about petitioning for tariffs on Russian imports. They're saying, Russia's selling palladium under market and it's hurting them. And so they're petitioning for tariffs. I saw an article recently by Stansberry Research saying that expect big gains out of palladium after palladium's breakout. And anytime I start seeing this information hit the internet, it's always a great thing to bring it up with you in our video. What do you guys see in going forward in palladium right now?
I think there are great opportunities for intermediate term investors in palladium and in platinum right now. Palladium prices got very high up until 2021, 2022. They come off, and from late 2023 until June, they were basically trading between, say, 8 or 900 on the bottom and 1,100 on the top side. In June and July, platinum and palladium prices spiked higher. Palladium got over 1,300. So it rose, 30%. It's come back off. I think it's trading about 1,170 right now. Our expectation is that it probably will come off a little bit more. And you can see from the price increase in June and July, the capacity for the palladium price to rise and rise again. So right now you're sort of saying, which falls faster, mine production or auto demand? And auto demand has been holding up pretty well for a variety of reasons, cyclical, secular, and fundamental in the auto industry. So the demand for palladium's held up relatively well, but mine supply has been falling. And you mentioned Sibanye Stillwater. Sibanye Stillwater owns a Stillwater mine in Montana, and they have put one of their mines there on care and maintenance, and they may close it completely because it's sub-economic. At $1,100 an ounce, it doesn't make money. So that's good, and you look at the palladium market, we look at relatively healthy fabrication demand right now, falling supply. You're looking at a market that's been in a surplus for a few years, but the surplus has gotten very small last year. It's getting even smaller this year. And we could see a relatively sizable deficit next year as these mines continue to scale back and close and go on care and maintenance, if the auto industry globally hangs in there. If we have a recession, then maybe not such a bullish view, but still a bullish view. So you've got a market that, if you wait and you buy in at 1,050 or 1,000 or 950, you could have a pretty good probability that you could see a 20 or 30% increase in the value of that investment within a couple years on this kind of spike that we just saw in June and July. That's a pretty good return in a hostile economic environment for financial assets.